All right. Yeah. Thank you all so much again for joining our session, which is all about budgeting and cash flow with Patrick Cassidy. As you know, we're doing this program all around finance skills, and I'll pass you all over to my colleague Sarah, who will just give you a little bit of intro and background for what's going to happen today. Thank you.
Yeah, thanks, Ed. So, yeah, thanks for joining us today for another session with as the Launch It Founder Finance Academy. So, as you know, this program is all about building your confidence with money through workshops like this, mentoring, and our digital resource hub. So, we'll have a Q&A at the end and also like a short poll, which will pop up on the screen, and the session is being recorded. So today's session with Patrick is about intermediate budgeting and cash flow. And he's the founder of Negotiation Works. He's also one of our trusted mentors. So I'll pass over to Patrick so you can
Okay,
introduce yourself.
before we get on the session, this will be the budgeting and cash flow basics session.
That's right.
Sorry.
Yeah,
Yeah, I was going
and
to
Sorry.
say,
no worries.
yeah.
And the next week,
The next one will be
two
the
weeks from now, will
intermediate.
be the intermediate. Yeah, yeah.
Yes, sorry.
Right.
Yeah.
Okay.
No worries. Thanks.
All
Thanks.
right. Let me put my screen up and let me know if you can see that and it's full screen for everyone.
Yep.
Yeah. Okay, I'm seeing some nods. Good. So I think we got about an hour together. I'm going to run you through budgeting and cash flow basics and why that's important for your business. I'm doing a couple of these. So, as Sarah said, in 2 weeks' time, we're doing an intermediate session where we'll build on some of the principles that we'll learn today and help you and teach you how you actually use some of the concepts that we'll explore today to actually run and plan and strategize for your business. But today is foundational. Last week I did pricing for profit as well, and actually budgeting was a big part of that. So they're all sort of interlinked and interdependent on each other in terms of how you budget, how you manage cash flow, how you set pricing for your business. I'm Patrick Cassidy. I was a commercial director for Vodafone for 15 years. I spent those 15 years working on our large corporate enterprise deals, running a lot of P&Ls, putting a lot of proposals in front of customers, which is why I wanted to share some of our experience with you today in that. I've since left Vodafone. I now run Negotiation Works, which is a boutique consultancy that supports medium-sized businesses with negotiation consultancy and support. I'd encourage you as we step through this as well to ask questions, interject. I want to make sure that once we're going through each of the different areas that you fully understand the concepts, you understand the terms, you understand how this can be applied to your business, so that when you leave the session today, you're equipped to go and start creating your own budget, managing and understanding your cash flow, and you can use that in your business straight away. Okay? So here we go. We'll run through why budgeting matters, why it's important for your business. I'll then take you through a basic budget as well, show you all the different components of the budget, how to compile that, and why it's useful and what to look for. We'll then talk about cash flow and why that's important. And then we'll do a quick exercise together on building your own cash flow. And then to summarize it all, I've got a few exercises, a few things that you can do, a few things to watch out for yourself as well, so that you can get started with budgeting and cash flow. All right. So budgeting is fundamentally important for your survival as a business. It's a foundation for you to understand what's going on in your business and how to plan for the future, how to make better decisions about how to run your business. So if we first of all look at what a budget is, So a budget is essentially just an estimate of what you think is going to happen within your business over a defined period. That defined period could be a month, it could be a quarter, it could be a year, and it could be multiple years as well. I mean, if you think about your budget that you probably have for your running your home, you've got some income and you understand what you've got to pay every month in terms of your rent and food and expenses. A budget for your business is essentially the same thing. You're basically just trying to estimate that, do I have enough income coming in to cover my expenses? Am I net positive at the end of that? And immediately what that illustrates is, do you have a problem within your business? Is there something that you need to do to adjust to make sure that you're generating more income than you have expenses going up? And we'll talk a little bit about how you adjust and manage for that as well. Now, cash flow is similar to a budget, but it's not exactly the same. So if you think of the budget as the estimate of what's going to happen, the cash flow is actually what happens within your business. So it's when money actually hits your account and it's when money actually leaves your account. And the reason why those are important is that you can have a budget that shows that you are net positive, you're making money in terms of your income is greater than your expenses. But if the cash is landing in your business at the wrong times, then you could run out of money. So you could have a profitable business on paper, but actually, if you're paying your suppliers sooner than you're getting money from your customers, then you could run out of money and you won't be able to buy stock or raw materials to run your business. So that's why both of those are important. It's important to understand what you forecast to happen in your business, and then it's important to manage the cash flow so that you can run your business day to day. Now, when you're starting out with a budget, start simple. There's no need to get, overly complicated. Just starting to track your expenses is important. And it's very important as well that you track every expense. And on the next slide, I'll talk to you a little bit about what some of those expenses are and what to look out for and what people generally miss. Look at your bank statements, look at the last couple of months, start to track that through, and record everything and see if there's any gaps, anything missing, see when money is landing in your account, what that looks like. Does it line up with your budget estimates? And then the best thing to do as well is just to spend 30 minutes every week doing this. So don't wait till the end of the month. Don't wait till 6 months. Don't wait until you think that you're making a profit. Do it religiously every single week. Set 30 minutes aside on a Friday afternoon for you to sit and go through. So what happened this week in my business? What did I expect to happen? What actually happened? What expenses have I incurred? Is there anything new? Has anything changed? Do I need to take any do I need to make any changes for the next week to make sure that it all works to plan as I was expecting, and it prevents any surprises for you as the business owner. And as you do it more frequently, more regularly, it becomes easier. You start to know what to look for. You start to notice patterns in the way that your expenses run. And that makes it easier for you to manage it, and you can see problems before they arise much sooner. Any questions on that before we move on? No? Okay. All right. So in the top left-hand corner, what you'll see there, and let me get my pointer. There's a pointer. Okay, so over here, you can see a basic budget. The first line there is revenue, which is your income. So that is what you're expecting to sell in your business. And your income is a simple calculation of the number of units you would expect to sell times the price that you're selling for. And then that is your total income for the period, which in this case is looking at a month. You then have different types of expenses as well. You have fixed expenses, and you have variable expenses. Now, variable expenses are the types of expenses that increase with every unit that you sell. Now, if you think here about materials, so you have to buy raw materials for the product that you're selling, and therefore that raw material, every time you sell something, you need raw material. So that's a variable expense. So it's easy to calculate those expenses because you have an expense for every product that you create related to that product. And therefore, the number of units that you sell times the cost of that expense gives you your variable cost. And those costs generally sit within cost of goods sold. So that is a variable cost. It's directly related to the number of units that you sell, and it varies by the number of units you sell. So if you sell less, you'll have less expenses. If you sell more, you'll have more expenses. And what that gives you is what we call gross margin or gross profit. So gross profit is your income less your variable expenses, the cost of creating the product or making the product, or the time spent on that product. And some of those expenses, as I said, could be materials. It could be the direct labor costs of producing the item. It could be raw materials, transport, etc. So anything that adjusts with the unit. You then have operating expenses. The operating expenses are then what it costs to run your business. And these generally tend to be fixed. They can be variable depending on the amount of activity during a month, but they don't adjust with the number of units that you sell. And examples here would be office rent. So if you rent an office or a factory space, whatever it is, and that costs you £150 a month, regardless of how many units you sell, you're going to spend £150 a month. So that has to be in there as a monthly expense for whatever time you rent that. If you rent it on a 6 month basis with a cash up front, you just divide it by 6 and you put it in here. So the important thing is that your expenses are allocated to the time frame that you are budgeting for within this. I also include salaries in here. So you may have some salaried staff members. So if you're a sole proprietor, it's a little bit different, and I'll explain that in a minute. But if you're a limited company and you have staff within your company, then their costs would go in here too. If they're working in production and that they're making the product that you're selling, then their costs would actually sit in the cost of goods sold because they're part of the production and therefore they're a variable cost. If you didn't make the product, you wouldn't need them to make the product. I'll stop there for a minute, see if there's any questions or clarifications, because we've run through quite a bit. I just want to make sure that everybody understands the general concepts here that we're talking about. So income less your variable costs gives you gross profit, less your operating expenses, which generally tend to be your fixed costs, will then give you operating profit. And then your operating profit is essentially the profit you're making on the business. And as a limited company, that's what you would pay tax on. As a sole proprietor, I just want to make a very important distinction here. As a sole proprietor, the profit you generate on the business is your income, and that's what you're taxed against. Okay, I'm seeing some nodding, so I'm hoping that everybody's understanding and getting this. For budgeting perspective, though, the one thing I do want to call out that's really important for you is that most people forget to cost their own time into their budget. It's the one thing that I see very regularly with small business owners, particularly sole proprietors. They think that their time is free. But when you're creating a budget, you need to include time for yourself and therefore a proxy for your time as a cost that goes into the budget. As a sole proprietor, that would be different for tax purposes, but why it's important for your budget is two things. Number one, when you come to price your service, If you don't include your time, you're going to be undervaluing the cost of that service or the cost of production, which means you're going to be undercharging when you come to price your service. The second reason why it's important to put this into your budget as well is so that you're including this as an opportunity cost is what we call it, because your budget and your business should be generating more profit for you than something else that you could do. So your time is what is valuable in your business as the business owner. And if you could be making more money doing something else, then you need to consider whether or not you're charging enough, whether or not the business is sustainable enough for you, or whether or not there's any other adjustments that you would need to make. If that makes sense to you. Now, obviously, there's lots of other reasons why people get into business. It might be the flexibility. It might be the time available that you have to work on that. It might be location. So you need to also value that in terms of, I mean, what I would use as a proxy for time is almost kind of the minimum wage allowances, which is, I think, as of today, £12.71 an hour for minimum wage. So if you think about the amount of time that you spend in your business, and you were to say, I spend 10 hours a month on production, then 10 times 1271 would give you your labor costs that would go into that. And then the balance of your time would sit within your operating expenses. That's when you're working on your business. You're doing administration, you're doing marketing, you're doing invoicing, customer outreach, whatever it might be. And then that gives you a good view about how much time you're spending, what the value of that time is. It allows you then to compare that against other options that are available to you, which might be employment, or it might be that when you come to price your service, you're making sure that you're pricing appropriately. You're not just recovering for your overheads and raw materials, but you're pricing in your time as well. And a lot of time, your time is what's important. You bring the creativity, the innovation, the skill to what you do. And when you value your time here, you might decide to increase the value of the time beyond minimum wage because what you do is unique, special, innovative, creative, and therefore it's worth more to your customer. Or you might be solving a wonderful problem for your customer that's saving them time and money. And therefore you need to add that as a premium into the cost of your time because of the value that it delivers. At the same time, if you get a lot of flexibility from what you do, that you can't do other things, then you might decide to lower the value of your time because actually working in the business generates an income for you that you wouldn't be able to get somewhere else. So you can adjust up for value and adjust down for freedom and flexibility that you have that allows you to work in this business. And then by creating that budget, it allows you to understand the total cost of running your business, including production costs, raw materials, and overheads, your time, plus any other time that come into the business, and whether or not your business is making a net profit. And then you can decide whether or not that is sustainable, right value for you. And it also opens up a whole bunch of other opportunities for you to then start planning and adjusting for your business as you go forward. And if you look on the right hand side, you can see there's a 12-month plan there, and that 12-month plan really allows you then to forecast over the course of a year. What happens if my sales increase over the course of the year? What happens if my raw material costs increase? I mean, you look at what's going on in the world at the moment, fuel prices increasing, raw materials, transport, what does that mean to your budget over time? And at what point do you need to start looking? Do I need to renegotiate some of my supplier costs? Do I need to look at alternative suppliers? Do I need to increase my pricing? Straight away, there's lots of different things that you can do if you can see over time what's going to happen to your business because you're effectively and accurately plotting your income and your costs to understand whether or not your business is still making a profit. Once you can see what's going on in your business, you can manage that and you can take action. And that's why it's really important that you set a budget for your business. Okay, I'm going to crack on unless there's any questions. I'm assuming everybody's getting this. Um, I guess the one thing I would say on here as well is that when you look at operating expenses as well, one of the things I haven't included in here, which came up last week when we were talking about pricing, was capital expenditure. So if you have to buy anything for your business, I don't know, a printing machine, a van to transport things around, the way that you budget for that in your business is you allocate a cost based on the what we call the useful life of the asset. So let's say you bought a van, for instance, and that van cost you £10,000. You wouldn't allocate £10,000 into your budget in the first year or the first month because it would push your budget, completely in the wrong way. You'd be overcharging your customers, or you wouldn't be making a profit for a period of time. But what you do is you take that van and you say, well, I'm going to use that van for 5 years or 7 years or 10 years. And then you take the cost of that van, less the residual value, because remember, you'll be able to sell that van at the end of the period. And then you take the residual, sorry, you take the net cost of the vehicle and you allocate it out over the period. So if the van's going to last you for 7 years, it costs you 3,000, sorry, 10,000, and you could sell it for 3,000 in 7 years, then you've got £7,000 of cost you need to recover. So you would then allocate £1,000 per year to your budget, or what is that, 80 something pounds a month would then land in your budget. So that means that you're recovering the cost of your van over the life of the asset, and you're making sure that you're pricing appropriately, you're making sure you're still making a profit, and everything works, and you're not overinflating your costs or your price to your customers because of a capital purchase. And this is what we generally do within the accounting world, where you depreciate an asset, you allocate it into your budget, so that you're recovering the cost of that, and you're not sort of um, exploding the cost or the price for your customers because of a one-time purchase. All right. Um, any more questions or any questions on budgeting? Because we're going to move on to cash flow after this. No? Okay, I'll keep going. So as I said, cash flow is different from budgeting because cash flow is when the money actually hits your accounts. And if you have a good sales forecast, but you're not recovering for your money from your customers on time, or you're paying your suppliers up front, but you're giving your customers 30-day payment terms, then you're going to have what we call a cash squeeze. There's different things you can do to adjust for that, but it's important to understand how that operates and works. So cash inflow is when the money actually hits your account. It's not when you issue your invoice out to your customer. It's not when you make a sale. It's when the money actually lands in your account. You physically got the cash. You can see it in your bank account, and you can then use that to pay expenses. Cash outflow is the opposite. It's when the money actually leaves your account. So when you're paying your suppliers. And the dangerous time is the difference between those two elements, and understanding what you can do to adjust for those. A positive cash flow is obviously when you have more money coming in than going out, and a negative one is when you have more money going out than coming in. And I'll teach you how to plan for that, how to adjust for that, and what to look out for. Um, so when you're looking at cash flow, it's important to track when things are actually going to happen, not when you forecast them to happen. That's what the budget does. You need to know what your payment terms are, both with your suppliers and with your customers. And look at how you then manage your bills so that they land around when you get paid. Yeah, I worked in a corporate environment for many, many years. I used to get paid on the 28th of every month, and I'd make sure that all my debit orders came off on the first of the month so that I had a positive cash flow running through my account. So, remember that revenue forecast in your budget is not cash. Cash is what's in your account, and that's when you can actually pay. If you don't manage this, it can kill your business. Cash flow kills more businesses than anything else, and it's all about timing. Um, I would always recommend, if you can, to have a surplus within your business of about 30 days worth of expenses, just to make sure that, if anything happens, a supplier late pays, something goes wrong, that you at least know that you've got enough money in your account that you can let that roll over for a month. It's all about timing. It's all about managing the timing of when things land and when things leave your business. So here again is another example of what a sort of basic cash flow looks like. And Sarah, I think I sent you the template for this as well, which you're going to share with everybody afterwards. So there's a template for budgeting and there's a template for cash flow as well. Is that right? Yeah, I can see you nodding.
Yeah. Yeah.
Okay, so you'll get these templates afterwards, and you'll be able to kind of populate them and play around with them yourself just to see how they work. So the important thing is to start with your opening balance. So if you see in the top left-hand corner here, this is a nice healthy business. So it starts with an opening balance of £1,500. You then input what are your expected cash receipts. So what's coming into your business and when do you expect those to land? If you're running a cash on delivery business, then you don't have payment terms. People pay you as they collect the goods. But you might have some customers that are, good long-standing customers, and you give them payment terms. So, once they collect the goods, you issue the invoice, and they pay you in 14 days, 30 days. I wouldn't recommend 60 days, but you might have something in there with some customers. So, when do you actually expect the money to land in your account? Once you've completed the activity. And then the next thing to plot out is your expenses. And again, different from your budget, when you actually expend these to leave your business. And you'll have different frequencies of payments. Your raw materials might be paid on a monthly basis. Shipping costs might be on a weekly basis. Marketing costs might leave your account every 2 weeks. So, again, looking at your bank account, understand when the expenses leave your business. Plotting expenses, I think, is a lot easier than plotting income, because your suppliers will generally be very good at making sure that they're charging you and recovering the money timely, which is something that you should do as well. I always say to small business owners as well, never be afraid to invoice your customer. Never be afraid to ask for the money for the service that you provided to them, and make sure that you invoice quickly. Don't wait a couple of days after you've produced the goods or delivered the service for them. Invoice immediately. If you wait a couple of days, it signals to your customer that the payment is not important. It can wait a couple more days, and that might lead to them delaying payment to you, which you don't want. So always be really timely when you're issuing your invoices. So the way the calculation works is pretty simple. And this you do more forensically. So, generally week to week rather than month to month or quarter to quarter. So, because cash flow can become a constraint really quickly yeah, within a week rather than within a month, because a lot of things are happening in the month. So what was your starting balance? What is the amount of cash that you're paying out, and what is your remaining cash in the week? And now I've plotted this out in a very positive way. So the positive cash balance within the business is positive all the way right through. There's no issues here. There's nothing to worry about. There's no adjustments you need to make. The closing balance within the business after 8 weeks is generally the same as what it was at the start. The only thing I would say here, though, is not a very profitable business. If your net cash position at the end of 2 months is £17.50 less than where you started, then you probably need to increase your prices, or you need to look at your costs of your materials in running your business. But that's the only thing that I would say about this business. Looks really good, no issues, no kind of constraints on this at all. Just keep running this forward, looking at where you are, and making sure that you're generating positive cash flow, money's coming in at the right times, and you understand when cash is leaving your business. Now, this one is slightly different, and here I'm going to ask you for some audience participation. To straight away here, in week 2, you've got a negative cash position. It returns to a positive cash position in week 3, but then for weeks 4, 5, and 6, you have a negative cash position, and returning to a positive cash position in weeks 7 and 8. So the fact that you're ending at the end of the 8th week with a positive cash position tells me that the business is profitable. It's generating more cash than its expenses, but you've got periods during this 8-week period when your cash balance is below your expenses. So I've done this intentionally, and I want to ask the audience, what would you do if this was your business and this is what you plotted out in terms of your cash flow? What are some of the things that you think you could do to make this better?
I would probably either see if I could negotiate with customers to see if I could get paid early, compared to the agreed amount. I don't know why it would be in week 7, for example, compared to if it could be earlier, or maybe reduce cost of raw materials.
Yeah, those are two things you could do. Anything else?
I would probably check my cost of materials and see if I could pay some invoices a bit later just to have some cash flow.
Yeah, yeah. So, uh, Gene, just for that one, so it's not checking the cost of the raw materials, but it's actually looking at the payment terms. So what you want to do is you want to see whether or not you can pay your suppliers later. So if you look at, I mean, the thing that's causing most of the issues here is this raw materials payment that you're making here. If you were to push that out to the end of the month, you wouldn't have a problem. That 350 you're paying out there is higher than any of the weekly deficits that you have across here. So if you were
Yeah.
to push that out to the end of the month, it would solve all of your problems. But by planning, by looking at this, immediately you can see where the cash crunches are coming, and it allows you to take action. So the things that you can do here is you can delay payments. So can I pay my suppliers later? Can I adjust to 30-day payment terms? Which means if I buy in this month, they invoice me at the end of the month, I would then pay at the end of the second month. So 30-day payment terms essentially give you 30 days plus whenever you took delivery of those goods within the month. You could also look at bringing your income forward. So if you have some customers that pay you on at the end of the month, so if they pay you at the end of the next month, you could look at bringing that all into cash on delivery. and making sure that you can pay it up front and generating a positive cash flow. You may also look at bridging finance. So this could be an overdraft from the bank to help you through these periods. It could be a short-term loan. It could be loans from family or others. This is all about timing. Your budget works, your cash flow is positive over an 8-week period. You just need some cash to help you through these periods. I would always start with looking at bringing income in sooner or delaying payments before looking at any sort of financing, because financing comes with a cost as well. You have to pay interest on that. You might have to do some favors for your family members or whatever it might be in order to get them to lend you some money short term. But these are all options that are available to you. You may also offer some incentives to your customers to pay early. That could be a discount. You could say, I'll give you 2.5% discount if you pay me cash up front, because money has value over time. So if you're giving a discount, and the easiest way to look at that is the interest rates in the UK at the moment is 3.75%. So the bank rate for cash is 3.75%. If you're giving your customer a discount that's less than 3.5% over a 12-month period, that is net positive for you in terms of the value of that money. So if you were to put it in the bank and generate interest on that, you would generate interest greater than the discount that you're receiving. Remember, the 3.75% is over a year though, so divided by 12. But there is real value in getting your money in earlier than there is in allowing payments to be deferred, particularly if you're seeing a cash squeeze and you want to get paid earlier to make sure that you're generating a positive cash flow. Because getting that money in earlier might be the difference between you having a business that's going to survive and not survive. The other things that you could do as well is you could increase your prices. So if this is an ongoing issue where you're seeing a bit of a cash squeeze, maybe you're charging too little. So you can always look at increasing your pricing, or on the other side of that, looking at your costs. So is there a different supplier that will give me better payment terms and lower raw material costs? Do I need to look at a different courier for my shipping? Can I move premises? Is there somewhere better, different, cheaper? Can I look at my marketing expense? Am I getting value for money from that marketing? But hopefully you can see that by having a budget and plotting out your cash flow over a period of time, it gives you immediate referenceable data for you to make better decisions about your business. And that's what's important here, is that you're managing your business rather than just responding to your business and responding to income and expenses. And a well-managed business, a well-planned business, is a successful business. So this is pretty much my last slide before we kind of open for other questions. So what you've hopefully learned today, and what you'll get from Sarah in terms of the templates that she'll send out is a budget for you to then start planning and tracking the forecast of what your business is going to do, and also then be able to track your cash flow, which is when money actually comes in and leaves your business. You can hopefully now as well categorize income into fixed expenses and variable expenses, and understand where they sit within a budget or a profit and loss statement, and how to calculate that effectively. I think, start simple, create a simple budget, look at your cash flow at a minimum, I would say over 4 weeks, But even better if you can do that over 8 weeks or potentially even 12 weeks, or 3 months. What I'd like you to do after today is to take that template and start plotting it out. Get your expenses from your bank statements. Look at what's happened in your business over the last 3 months and start to plot that out. Get a basic budget together. That will then enable you to start managing your costs and expenses, to start pricing your services more effectively. And then from that, start to look at a cash flow statement. As I said, minimum 4 weeks, but look even longer because I think that makes more sense. And then put some time into your diary on a weekly basis, 30 minutes on a Friday, rather than building it up, and just review what's happened in your business over the week, what you planned to happen, what's actually happened, and do you need to then take any action for the next week to make sure that you don't have any cash squeezes within your business. It's really important as well that you don't mix your personal expenses with your business expenses. Make sure you've got a separate bank account for your business and a separate bank account for you. Try as much as possible not to mix them together because it's just going to make it much harder for you to manage that. And also when it comes to reporting your expenses and your income for HMRC, having those separate makes it much easier and simpler for you to do. Remember that revenue is not cash. Cash is what actually hits your business, and you can then use that to pay your expenses. Make sure that you factor in your own cost. Use a proxy for that, whether that be minimum wage adjusted for the value that you bring, or the freedom that your business gives you. Plan for taxes. They always say that there's nothing more certain than death and taxes, and that's true. Don't ignore it. It's never going to go away. You need to make sure that you're planning for taxes in terms of putting some money aside. So, based on your budget, what do you expect to make as a profit, as a sole trader, or as a limited company? Work out what your tax expenses might be and make sure that you're putting that money aside because, HMRC is going to come after you at the end of the year and make sure that they get their portion. And if you haven't made provision for that, it's going to be really hard for you then to, take a lump sum out of your business, 1 month to pay that out. Also, as I said, make sure you keep a cash buffer. That's important, because things happen. Things go wrong within a business. Your sales might be lower than you expected. A supplier might not be able to provide services for you, and you need to look at someone else who might be slightly more expensive, or a customer might ask you to delay payment because something's happened with them. So keeping that buffer, make sure that your business is sustainable, or as I said, that you've got an alternative. You've got an overdraft for the bank, a short-term loan, something that you can tap into that's going to be right for your business, and make sure that you can run your business effectively for a period of time until the money actually lands back in your business. I would always say underestimate income and overestimate expenses. Don't overestimate your income and think you're going to do better than you are, and underestimate your expenses. I also see a lot of people don't include every expense within their business. They forget about things. So, be really diligent in identifying every business expense that you have and allocate it into your budget. It's better to be conservative, and overestimate costs and underestimate revenue. And therefore, if you overperform against that, then it's going to be a net benefit for you. In the next session, when we talk at intermediate, I'm going to talk about different scenario modeling as well, how you look at a kind of a best case, a realistic case, and a worst case, and then how to plan through those as well. So that's it. Hopefully that's left you with a good understanding of budgeting and cash flow, why it's important for your business, some of the steps that you can take when you start to see cash squeezes coming into your business, and how to make sure that your business is sustainable in the long run. Thank you very much. I'll hand back on to Ed or Sarah.
Yeah, thank you very much, Patrick. That was really helpful and insightful, and I hope you all got to take away something from this session today. Do you have now? We're just going to be opening the floor for any questions. Does anyone want to start the ball?
No, I think I'd just like to say one thing. Thank you very much, Patrick, because I work for Launch It as well, and I've invited three of our businesses along to this session because they've been nominated to run these small little kiosks
Yeah,
in Edmonton. So like they're all early starters, and this will be a fantastic preparation for them, especially in terms of what you're talking about, the budget and the cash flow essentials, and with the initial uh, template that you provided, so they could actually use this as an action plan, is what you've
yeah.
been saying. We can actually monitor it as well, in a sense.
Good,
So
good. Well, I'm
thanks a
glad it's
lot.
helpful.
Yeah.
No, it will be helpful. It will be
I mean,
helpful.
I mean, a lot of small business owners get into business because they're good at something. They're good at a product or a service or whatever it might be, but don't necessarily have the commercial or the business acumen to understand that. And I've worked in businesses in the past supporting small businesses where I've seen people come with shoeboxes full of receipts and saying, I don't know if I'm making money.
Yeah, yeah,
Please help
yeah.
me.
hmm
So,
I think they get caught up with all the obviously when you talk about cash flow essentials and so forth. I think like the interesting thing is actually going back to basics in my view, in a sense of actually, as you say, uh, the the weekly like looking at in terms of the cash, making sure that the cash hits your account. And I think there's this perception that this is what I'm going to generate, but not actually obviously like overestimating income. And I think that's
overestimating
a key
or
thing.
yeah, I
I
mean,
think that's the key
it's
thing.
it's
Yeah.
easy to
Mm,
be optimistic in terms of what you can do, but everything
mm,
flows from this essentially. Your budget is the starting point,
mm.
which is how much do I expect to sell? What am I going to sell it for in terms of the price that I set?
Yeah, the pricing and everything. Yeah.
What does it cost me to actually create a product? What does it cost me to run the business? And is that profitable? I mean,
Mm,
that's the first place you start, and then you go, you know, if I increase the price, does that make it more profitable? But then are people willing to pay that price for the service? Then, I'd look at the competitors. Who else is out there? What are they doing? Is
mm.
that a market price that I'm selling it at? So everything kind of stems from that to say, is this business gonna work,
Is it
essentially?
a viable
Yeah,
proposition? Yeah,
is it a
exactly.
viable
Yeah.
proposition?
Mm, yeah,
Does everything
exactly.
balance
Yeah.
out? Do I have a solution here for people that I can sell at a price
Mm.
that's going to generate a profit?
Yeah. No, no, no. I think it's brilliant. I think it's brilliant. Thanks.
All right.
Yeah.
Yeah, do we have any other questions from the participants?
Hi, sorry.
Go
Thank
ahead.
you so much for the presentation. It's really helpful. So a little bit of context. I'm just starting up, hopefully launching a website, doing a soft launch in the next couple of weeks. I've got a set amount of money ready to start the business. Obviously, there's a lot of expenditures when you're starting up. Um, do you have any tips for that set amount of money? How much you should be like putting aside like in savings, and how much you should be putting in towards the starting up costs?
Um, I mean, when you're starting a business, I think you should always look to have 3 to 6 months worth of expenses to get yourself going. I don't know what type of business it is, Shona, but you know, customer acquisition and getting money in from your customers um, always takes a little bit longer than you expect, particularly when you're starting from zero, because you have to build the customer base, you have to build trust, you have to build credibility, and that takes time. And don't be disheartened if, in 4 weeks, 6 weeks, it feels like you're plugging away and nobody's responding. It just takes a bit of time to build that customer base and generate the income. And what you don't want to do is get to a position where, after 3 weeks or 4 weeks, you have to give up because you don't have enough to keep that business going. It's important you do the planning. It's important you do the budgeting, the cash flow, um, the um, the forecasting of what the first 12 months looks like, and then be realistic with yourself. How long do I think it's going to take me before I can
Mm.
secure a customer? How long do I think it's going to take me before I can generate any revenue from this? And when you're starting out, you're absolutely right. You've got all these front-loaded expenses in order to get the business up and running, and probably a little bit more in terms of marketing, in terms of customer outreach, than you would if you had a sustainable business. But that's why it's really important that at this stage you plan, you
You
forecast,
plan, yeah.
you look at what's going to happen within the business, and you look at, what's the best case I could expect? What's the worst case? And, does this still work in the worst case scenario?
Would you advise test marketing? Like, because we used to have a lot of that back in the days when I spoke for the Finnish Trust. Some businesses used to do a little bit of test marketing to see whether there was a demand for their products or services in terms of identifying their particular
Yeah.
demographic target market group. So they did a little bit of test marketing to see whether there is something there that's going to be a
The,
viable
the, the important thing
proposition.
is to understand if you do have a market out
Yeah.
there. I
Mm.
mean, try and sort of spend as little money as possible, or the
Yeah.
least amount of money that you need to spend in
Mm.
order to get yourself to a minimum viable product or service.
Yeah.
And then and test it with potential customers.
Mm.
Um, you know, reach out to people and just, would you pay this amount for this service? What would make it even better? Um, what would you be willing to pay? Um, you know, what does it look like for you as a
What's it look
customer?
like? Yeah. Mhm.
Um, and who do you think would buy this? Who do you think wouldn't buy it? And just test it out, just constantly iterate and test before you go launch. Again, a lot of people put a lot of effort into making sure things are perfect, absolutely right. And even
Without
when you get to the
testing.
point of
Mm.
launching the business, you're constantly evolving and iterating and testing.
I have a question, if that's okay, Patrick.
Yeah, of
Can you
course.
can you hear me? Am I too
Yep,
quiet?
all good.
Okay. So my question is, do you have any recommendations for any grant funding or any funds kind of available for people like us in this situation where we're already starting out and say that, we've already completed a budget planner or a financial planner like survival sheet or like a forecast financial forecast for other like places that we've applied to and kind of we've in the process of making another application. Do you have any funds available
Um,
that you think that come to mind at
I'd
all?
actually defer to the launcher team actually in terms of the funding element. I think they're probably better placed than me. From a budgeting cash flow perspective, I think it's really important that you have a budget, a cash flow, and a forecast of what your business is going to do when you go and apply for funding to show that
Mm,
you've done the due diligence, you've done the
mm,
work, you understand what your budget is, you understand what your business forecast is, so that when you go and apply for that funding, you can demonstrate to the fund grantor that you've done the work and you understand what might happen and what might not happen.
mhm. And
Mm.
would you say that these terms could still be applied to, say, if you're about to, or you're looking into doing crowdfunding, this kind of information would still apply?
So crowdfunding, I mean, it would apply, but you probably wouldn't disclose the same level of detail
Oh,
from
okay.
a crowdfunding perspective.
Mm,
You wouldn't go into the level of detail in terms of, a full itemized list of expenses and costs and, your time and things like that. Crowdfunding, I think, is more, around the overall high level concept and funding requirements. In exchange for something else, crowdfunding, you might offer some of your services or product at a discounted rate in exchange for an investment. So it's slightly different in terms of how you would pitch it.
okay.
But the
Thank you.
underlying work is still there. I think just the level of disclosure doesn't need to be at the same level.
Thank you, Patrick. I appreciate you answering that.
Okay.
I mean, Janine, in terms of seeking additional funding, you've got, I know you've got the Keen's Trust, and obviously depending on the location you're at, they still do provide startup loans and grants in that respect. And also you've got the Virgin Media online. They also provide sort of like low interest sort of startup loans between 7,000 to 25,000 over a 5 year period in that respect. I mean, I did a few of those before the pandemic when I was looking at my businesses that was based in some of our units that needed a little bit of a startup loan in terms of running their particular business. And yeah, they were quite successful with that application in a sense.
Okay.
But
Thank
yeah,
you.
they are happy to sort of share it with you if you want afterwards.
Yeah, thank you, Clifford. I appreciate that. Thanks.
Yeah, thanks both. I think we have time for one last question, but before that, can I just quickly launch the 3 question poll, and if you can please answer, that would be much appreciated. And while you're answering the poll, don't forget that the next session with Patrick is the intermediate budgeting and cash flow on the 15th of April. And after that, 2 weeks after, on the 6th of May, I think especially for those actually pre-start or actively trading, we are holding a money clinic. So instead of a masterclass, we will have 1.5 hours dedicated for 10 to 12 people to get 30-minute sessions, one-to-one, with a consultant from Elixir. So Elixir is a global consultancy firm. So the advice you'd be getting is usually what they would give to like big companies and brands all over the world. So I would to take advantage of that opportunity because it's all free. And you get, before the session, we'll ask you for information about where you're at, what you're doing, what your goals and challenges are. And then they will tailor the advice for you. So I would just go to the link. It's all on the chat. And obviously, you can go on the website as well. It's all there. And hopefully, you attend and take advantage of that opportunity because that'll be a really good thing to do as a follow up to the sessions Patrick have done. If you missed the last one, pricing for profit was the last one. It's all uploaded on the site as well. So I think because it's all really connected to one another, especially for you, those starting up. Yeah.
Yeah. I'd recommend if you've joined this one, join the intermediate session in 2 weeks' time because I build on this session here and taking the basics of budgeting and cash flow and then apply that to how you would actually manage your business.
Yeah. Yeah. If can please answer the poll, that would be much appreciated. And we have, I think we can take this last question while you're finishing the polls. Oh, sorry, it's not a question. Yes, Keishel, I hope I'm pronouncing your name. Yes, it will be on the website, on the Founder Finance page, the recording and the templates as well, and even the recording of the past sessions. So yeah,
Yeah,
and
Shell's
hopefully
one of
you,
my clients.
yeah,
Yeah, she's one of my clients. So yeah, I'm sure she'll get access to that. Actually, yeah.
all right.
Hmm.
Thank you so much, everyone. If there's any no more questions, we'll end at this point. And again, we hope to see you at the next sessions and the Money Clinic, especially because that's limited slots only for a 30-minute free consultation. Just hope to see you there. Yeah. Thank you again,
Thank you very
Patrick.
much,
Thank
Patrick.
Thank
you.
Well
you.
done.
A
Bye now.
pleasure.
Cheers.
Thanks. Bye-bye.
Bye.